Hello there, Fourth Dimension Trading Time. Sean here. It's the update on gold, silver, and the dollar. I'm going to begin actually with some things that I found on gold, especially to do with the spreads and correlation, which I think is very, very important. First of all, just some information over the last 2 weeks. Talked about China buying lots of gold, and officially they bought 524 tons from Switzerland in 2022, which is a 5-year high, and up from 354 in 2021. India has also reduced its gold import duties, and when I did my interview the other week, the thing that I really feared was that Ukraine would escalate, and we've seen the first sign of that as Europe agrees to send tanks, America as well. They're not going to get there till March, April, but the intent is there. And then the thing that I really want to talk about is the fact that there's been some big developments on gold spreads, and they're actually at a 30-year extreme. And I've talked about fear, and that's what can make gold go up. And this does equal fear. So the first thing I'm going to show you is the current February April spread, which is the blue line right at the bottom there, and the previous 30 years of the spread, and you see that it's much lower than what it has ever been previously in history. And then when we look at the 1-year spread, we see exactly the same thing. So this is February 23 to February 24, and it's much lower and has just been consistently dropping for the last year basically. So now I'm just going to show some charts. So this is a continuation chart of the 12-month spread, and that vertical line is the day of the invasion. And basically, really, we broke through that final monthly support soon afterwards, and basically the spread has been moving lower pretty much ever since. Now, the normal relationship of this spread is that when gold goes down, the spread goes down because people are speculating and selling the futures, and it will tend to, the nearby futures will tend to drop more than the ones further back. And the opposite happens when gold goes up. Then normally the spread would go up because people are buying the front month more than they're buying the back months. So that is the normal sort of relationship that we get. But then if we look in the last year, again, that vertical line is the invasion day, and we see that really gold went down soon afterwards, all the way to November, and what happened was the spread, not surprisingly, continued to fall. However, when we look from November, when we started the rally in gold, then what's happened is that the gold has gone up, but the spread has continued to fall, and that equals fear again. So it's doing the opposite to what it would normally do, and so it's also at its highest ever level in that spread. So it's never been basically the market's never had this much fear in the last 30-40 years, well actually 50 years. So I'm just going to go back to 1979, and we had a massive gold rally then. That was what got me into the markets actually. It used to be on the news, and that's what got me involved. So initially when gold started accelerating, then the spread rose, and this is because of speculators buying. So normal sort of relationship. However, afterwards, what happens is that gold then began another acceleration and doubled in value. So it went from 350 to 800, and look what the spread did. The spread actually collapsed, and the reason for that is that the traders think, okay, gold is going up now, but I think it's going to be going up in 3 months time and 6 months time, and so again it has fear in the market, and so the spread collapses. Rest assured, from now on, as we do start to get this escalation in Ukraine, I will be watching that spread very closely, because that should give us some indications about what the futures price can actually do. Okay, thank you.